Hi guys, so in my life I have purchased real estate in three different countries. So one is that I have purchased a lot of real estate in India, primarily in South Goa. Very happy with those purchases. Second, I bought a property very recently in Dubai. So it has a unit which is near Burj Khalifa. So that's a second unit, second country. And third, I have purchased a house in Thailand, right? So these three places, three different locations, I have purchased real estate. Now, this is not a bragging video. The reason why I highlight this point is that I have practical experience of buying real estate across multiple geographies. And as a result, I will be able to share my perspective of buying real estate and some hard lessons, good, bad stuff that I've learned about real estate purchasing from an investing lens. This is very important because these days when you open up like YouTube videos, you will see like a developer doing a podcast. But it's developer's job to sell you his property. Okay, so he's not going to give you like a fair assessment. So on this video, if you listen to it in a rational manner, there are some good points that you'll pick up. So in a no nonsense fashion, let me start detailing out my learnings from real estate. I will highlight 10, 12 key points, right? So let's begin. The first key thing that I learned about real estate purchasing is the fact that you need to consider real estate either as an investment or a lifestyle property. For example, most of us, most of the retail investors are interested in buying a house, but we confuse it with investment. See, for example, if you're buying a house, then buy a house. Don't worry too much about the fact that, what returns will I make out of it? And will I be able to sell it after 2 years, 3 years? Because the problem is, and the rational argument here is that if you build a home, if you attach like your kids' pictures, if your kids are spending time in that house, will you really sell it, right? I mean, at least not in your lifetime, you would not like to sell it. So the point is that don't see a house as an investment. And similarly, if you're making real estate purchases, from an investing point of view, don't confuse it as a house. This is one of the key changes or key things that people in India do not know. They consider their house as an investment. It's very unlikely that you will sell it, right? And so please don't do that. It's not worth it, right? My advice to you is, and this is something that I have personally applied. So across the board, I have purchased like maybe 50 crores worth of real estate, right? And in that, I own one house, right? And that house is in Goa. And that is the place where I would eventually settle. And that house, I pretty much bought it like last year, right? And I did some renovation work in it. In fact, renovation work is going on. So the key tip that I would give to you in terms of buying a house is that try to buy like an older house. There's a trick behind it. The trick is that, see, what ends up happening these days is that there is a lot of inflation which is happening, especially on commodities. So builders, for example, if they have started developing a project in, let's say, 2025, they will give you the handover in 2028. But for the next 3 years, they have to deal with cost of construction inflation because the price of cement will go up, price of bricks will go up, price of labor will go up. So they do their worst computation. They'll say that, okay, today, after 3 years, inflation will at least be 10% a year on construction material. So if today I feel the fair value of this property is 100, then after 3 years it should be 130. So मैं 130 के हिसाब से I will sell, right? So that is what they do. And this is one of the reasons why, if you, for example, come to Dubai market, you will realize that off-plan properties, off-plan means under construction properties, on per square feet basis are at least 20-30% higher compared to ready properties, which does not make any sense because ready property means that, hey, you can pay money today and you can get possession of that property and start getting rent or saving rent. But these properties are cheaper in majority of the parts of the world, not just in Dubai, even in like India, you will see like markets like Gurgaon, that this is happening, that your newer units which are getting constructed, they are much, much expensive compared to older units. So if you're looking to buy a home, my advice would be that buy like an older unit. You will get more spacious. You will get a much better price also. And in all likelihood, much better location as well, right? So because whatever new developments are coming, they will either be on the outskirts of the city. Absolute like main city development will not happen, or like prime location development will not happen. So if you want to enjoy like good location, good society, reasonable sizes and reasonable prices, buying an old house kind of makes sense. Now, from an investment point of view, is that the best thing? That is a subsequent discussion. But this is my viewpoint. Now, this is not the viewpoint. This is my assessment, which brings me to the second key point. And you need to align the first point along with this, which is that, see, what we think is that, and I get questions like, hey, should I buy it in like Gurgaon or Goa, or should I buy it in like Japan, or should I buy it like in Dubai? See, basically, it's not a question of Gurgaon, Goa, this, that. It's a micro market. So real estate does not work that, okay, if I buy an agriculture land, I'll always get like an appreciation. Or if I buy like a land, it will always appreciate. Or if I buy it in Bangalore, that city is developing, so my property will also develop. It's what you are doing is called as macro. Okay. Macro does not work on real estate per se. Why? Because there are individual micro markets. For example, I'll give you my own understanding. For example, when I bought this unit in Dubai, basically I bought it as a per square feet price of 1600 dirhams per square feet. Okay, this is the rate that I paid. Right in front of this, there is a building which is coming that is getting sold at 300 PSF. Now, I'm not saying that the building which is coming in front that is getting sold at 300 PSF, and now you'll say that, okay, you're making up this data. So just go and look up, right? In Business Bay, right? So this is the name of the area, Business Bay, Marseille Drive, right? So you can just search for it. What is the going PSF? So you'll see like premium developments hitting even like 3,500 PSF. Now, if I'm able to find out a property which is cheaper, right, then I would pretty much like pick it up even from an investing point of view or like, living point of view. So that's an assessment that I'm trying to give you. But the larger point that I'm trying to align here is that, see, real estate is a micro market. Micro market means that, for example, Business Bay, which is an area within Dubai, that's a market in itself. Similarly, if you're going to like Gurgaon, then there might be like South Gurgaon, North Gurgaon. I don't know. I've not lived much in Gurgaon, but I'm just taking random names. So maybe like Sector 19 versus Sector 27. The features of the properties there might be very, very different. So you need to talk about real estate at a micro lens. This is very important, very critical. Another example that I'll give you is the difference between North and South Goa market. Now, you would have heard that the North Goa real estate market got bloated, and in the recent downturn in tourism, the North Goa prices have corrected like crazy. But no impact was there on South Goa, right? Why? Because it was already at a value to begin with. So there was hardly any correction there, right? So long story short, Goa is not Goa when it comes to real estate. You have to differentiate between different areas. For example, Panjim, for example, Porvorim, for example, North Goa, South Goa. If you go to South Goa, then how far is the beach? Are you going in the interiors? Are you going in the farm play area, right? So a lot of considerations need to go in. So you need to check the micro lens. That is the important aspect in terms of figuring out investing oriented viewpoint. Then the third key thing comes is the concept of real estate cycles. Now, typically real estate cycles used to last like 18 years. And there, what the cycle means is that, see, there will be like a burst period, for example, 2020, and suddenly real estate prices will crash. Now you'll say that, okay, in 2020, mein price correction hua tha. Absolutely, right? I mean, properties were not getting sold. People were willing to sell their properties at half the price. Okay. So that was a crash cycle. Then there was a built up, then there was euphoria, then there was pure speculation, and then at some stage there will be another burst. Okay. So this is a cycle. And usually in the past, this cycle used to take like 18 years. This cycle was cut short in this current debt cycle per se, because a lot of debt was issued. So the fixed supply assets like Bitcoin, gold, real estate, they really escalated. Okay. So long story short, you do need to time this real estate cycle sensibly. I'm not saying that make all your investment decisions as per this real estate cycle, but some decisions need to be made. Now, how can we relate it to the current market? So think about it from the viewpoint in Bangalore, Mumbai, Delhi, these big cities. One key trend that has picked up here is that the new developments are being sold on payment plans. Now, this concept is not new in India. This was copied from Dubai. Okay, that in Dubai builders were selling it on payment plans that you pay 1% and the property is yours. You just keep on making 1% payment every month, and after like X number of months, the property is yours. Okay, people thought, great. Okay, you know what? Every month just 1% of the entire thing I have to pay. So this is amazing. So they ended up buying and speculating on properties. Right now, something similar has happened in India also, because as long as you push people to take like small ticket investments, people are crazy, right? And people will just speculate on that like anything. So this payment plan thing has picked up in Delhi, Mumbai, all that. So as a result, what has happened is that people are buying properties just to speculate. Now, these type of investments get very aligned with the real estate cycle. Now, if you are playing this game in a upward rising real estate cycle where the prices are continuously going up and are likely to go up over the next 2-3 years, okay, you can speculate. But in case you get caught in a bad cycle, then you are messed up really badly. Okay, because leverage works on both ways, right? So it's not just leverage is not, people will tell you that, okay, 20% down payment you make, rest 80% you can pay later, and by then your property price so aise badh jayegi, right? So why not you do this 1% plan thing? Sounds great as long as the prices are going up. But the moment the prices start correcting, the EMI defaults will happen and there will be panic selling, and you can actually lose a lot of money playing this game. So be a little bit sensible in terms of real estate cycles, right? So this is very critical. I leave it to your judgment what type of segment we are in right now. Is it like a boom cycle going on, or are we stagnating? Are we falling? Your call, right? I mean, how you want to see this, right? My job is to tell you the concept. Now it's your prerogative how you research it further. Which brings us to the next aligned point, and smart people will listen to this. You make money at the time of buying a property, not at the time of selling the property. You'll say that, okay, this is like ridiculous. So I actually have a client who's a billionaire, right? He works with me and he lets me manage his money in a way. So this is a concept that I learned from him. He's a real estate billionaire, by the way. So I do discuss a lot of things with him in terms of finding my own investment approach. So his point of view was that, see, I mean, unless you buy like a property at a good price, you're never going to make money on it, right? And this is true. And we kind of mess this up. For example, if you go to like a premium developer in, let's say, Hyderabad. Now, these premium developers will sell you properties at least 20-30% higher compared to like an average developer. And what is the narrative going on in the economy right now? Or if you speak with like real estate brokers or real estate developers, that, hey, our development cost like the best and we are the best, and resale value is this, that. So here, this is the reason why we are charging you like 40%, 50% premium. I'm not saying that don't pay a premium to a premium developer. Pay it, okay? But there has to be a limit to this, okay? If you are buying a property which is 20%, 30% above its fair value, honestly, you have lost 4 years on that, right? The average growth of real estate typically would be like 8%, right? That's a sensible real estate growth in India. And if you are paying like a 32% premium, it's at least like 3.5, 4 years of return gone, right? So please be sensible. You will lose money on that. On top of that, if you're buying apartments, right? Because apartments will typically lose value as they get older. So if you're playing this game on apartments, it becomes an even more painful point. If you're buying land, villas, anything associated with that, you can always remodel your entire villa, make it look shiny, all that. But if you're owning a small unit in a building, how will you make the entire building shinier, right? Building will be old, right? The facilities, common facilities in that building will be old. So you can't do anything much about it. So this becomes a slight issue. So remember this, that money is made in real estate at the time of buying real estate, not at the time of selling it. If you buy like 20-30% more expensive, you have lost money. If you buy it at below fair value or stretched value, then you will make money. My plan is very simple. I actually aggregated a lot of property in the year 2022, 2023. I did not buy much in 2024. This is a unit that I had purchased in 2022, right? At approximately 4 CR. Now the market going rate right now is 9.5 CR. Okay, so not kidding. This does not include like COVID boom and all. Okay, so why? Because this was a unique property. I got a good deal on that property. I waited a lot in terms of scouting, buying a really good quality property. And this is something that I do everywhere, right? So wherever I'm investing, I primarily would buy, I would have one home, right? I mean, I would not have like 100 different homes. So whatever properties I'm buying from a real estate investing perspective, I will take my time. Do a lot of due diligence. I will check the valuation pricing. The problem in terms of checking valuation pricing is that no one is going to come and tell you that, hey, this is the right price. So how do you figure out what the right price is? Well, do yield computation. So yield computation means that, for example, if some broker shows you a very shiny apartment and tells you that, you know what, the price is 1 crore. Ask him how much rent will I be able to fetch? They will give you some kind of false answer only, right? When their job is like property bechna. So they might give you like a false answer. Don't take that. I mean, take it. Okay, they might say like 50,000. Now go and investigate whether you are really making like 50,000 on it. Now 50,000 ke hisab se on a 1 CR property, it's a 6% yield. Why? Because 50,000 into 12, which is 6 lakhs. So that's 6% yield. Now this is really good number. Okay. Now if you're getting such deals, amazing. This is a very good rental yield property. Okay. But you're unlikely to get it because if such a deal exists, then what happens is that the base price of the property itself is inflated by the developer. So they will not sell you at 1 crore. They will sell you at 2 crores and bring the rental yield to 3%. So this is typically what they will do, right? So in order for you not to buy like super expensive property, always remember a 4% yield rule. So if you are able to find a property at around 4% yield, that's a good yield in a country like India. So this is what I would say. Now this number will change as per different countries, different cities, etc. But on an average in a metro, if you can't find a 4% yield on apartments, according to me, it's useless. Now many of you will get pissed off. How dare you say such a thing, right? That, okay, 4% yield, I'm getting only 1.5% yield. I did not tell you to buy that property, no? So like now it's your job how you figure out where you will get this 4% yield. I'm just setting the baseline rules formulas. And now it's your job how you actually end up scouting for it. The next point is around property maintenance. Now this is a new scam which is kind of brewing up, that you will be sold an apartment by XYZ builder, and that builder, what he's going to do is that, you know what, okay, 1 crore ka apartment hai, go and buy it, and you'll go and buy it, and then they will start charging you 5% or 5 lakh rupee as maintenance charge on that apartment, and you will not be able to do jack shit. Okay, so this is an unfortunate problem that happens. This is like the builders are not making money just in terms of building the building and selling you useless apartments, but on top of that, they are charging you crazy maintenance. So be very clear before you commit to buying any property. Please check what the eventual maintenance would be, how that society will be handed over by the builder to the cooperative society that your society will form eventually, what the expected maintenance would be. Get all these things in writing so that you have something to go back to, right? If you just simply end up locking yourself in a subscription where you're paying like 5-6 lakhs a year just for property maintenance on a 1 crore property, it's madness. It will just bankrupt you, right? So please be clear about this. This is very important, and this is like a new scam which is brewing up. Builders charge whatever maintenance that they feel like, right? For really useless amenities, there will be one pool and nothing, right? And they are charging like, you know, and one watchman that is like half the time, and he himself is like half the time asleep. Okay, so just for that they are charging you like, you know, per unit they are charging like, you know, 5-6 lakhs a year. This is madness. Okay, so, and a good property, I would say that it should not have like more than 2% to 3% max maintenance, right, a year. That's the maximum I'm saying. Yeah, anything beyond that, you really need to question it. Okay, so then comes the next point, that you need to buy real estate which you can liquidate easily. For example, I have seen like really wonderful land which is huge, and this is like a common problem in Goa, that basically it's very difficult to get anything developed in Goa, right? And people would end up investing in like, you know, 20,000 square meter plots. Now you have bought such a huge piece of land, you will go to the court, you will try to get it partitioned so that you can sell developed plots, because these developed plots are sold in like Bangalore or wherever. You can't do that easily in Goa. Okay, so you have to understand the dynamics, that even when you buy land in a state like Goa, it might be difficult for you to liquidate if it is huge parcel of land. Okay, so all these points are important. Please keep this in mind. Similarly, people end up buying like really expensive, very average properties, which again are like available in plenty in the market. They find it hard to liquidate. Similarly, people end up buying very similar, two common type of properties. Example, 2 BHK in a township. That's the hardest property to liquidate. Why? Because there are so many townships coming. Every city can forever expand, right? It's just again madness, right? So just be careful. If you're owning a very plain vanilla type of a unit, you will have a harder time liquidating it. So whatever units that you're buying, it should have some kind of unique proposition, right? Or a USP. This is an important point. Please keep this in mind. Okay, so now you might be feeling a little bit bogged down. Ki yaar, you know, itni jhangjak hai, then what's the point of even buying real estate? Why did you get into real estate? Okay, see guys, I'm like almost like 30% of my portfolio is real estate. 70%, 65%, 70% is around Bitcoin plus stocks. So I'm still primarily a stocks guy. Okay, I do trust equities. But what real estate allows you to do is that it allows you to handle volatility. Volatility का मतलब होता है, for example, if there is a 30% crash in the stock market, many people will panic if 100% of their portfolio is just pure stocks. That's problem one. Okay. Problem two, even if you're a seasoned investor, you don't bother too much. गिर जान दो, आ ही जाता है वापस market. Okay, cool. But see, here is the problem, right? If you're not having any income source, hypothetically, then having real estate, commanding rent out of it, what it allows you to do is that it allows you to get certain or almost certain cash flows, which you can then deploy in the stock market at the time of volatility. Just rewind the last 20 seconds, try to decode everything I'm saying. This is like very golden things that I've learned, right? So I'm sharing it with you, and then you make a call, right? So long story short, owning real estate gives you the confidence to take higher risk in the equity market. Okay, so the next point is that in real estate, you need to buy the next big thing, not the current big thing. For example, if someone is buying around like Jewar airport or whatever, right? Ki, okay, airport aane wala, and everyone like buys there. Prices have already been inflated and people are now cutting their things there. Okay, then you buy the next big thing. That's the more important thing. I personally do not speculate because real estate is a very concentrated bet. So I don't see a point in speculating based on news that okay, यहाँ airport आने वाला है, वहाँ airport आने वाला है, right? I mean that's pure speculation, because होता क्या है कि for example you might buy, someone will tell you that यहाँ पे airport आने वाला है, and you end up buying some land there, and then the government changes, the airport does not come, and then you're stuck for like 10, 15, 20 years because no one is buying there, no development is happening. Then that could be a bad thing. So I would personally not do this. I would not personally try to estimate that okay, this is where the next big thing is going to happen wala cheez. I would rather figure out like some kind of knowledge alpha within good, structurally good oriented things, right? For example, again, going back to my unit, which is near Burj Khalifa. So basically, my idea was very simple, that the going PSF is at least 2,500. If I can buy something way below the market price, it will give me good returns, and it ended up giving me very good returns, right? So, I mean, that's a sure shot bet. So I typically take these type of sure shot bets, but depends on what type of real estate investor you are. Okay, so then comes the next point, that you need to understand your goal of investing. For example, if your goal of investing in real estate is certainty of cash flow. For example, hey, my mom and dad are like 60. They require like a source of income. They are loaded with money. Should they go and buy Geo Finance stock? No. Okay, they should not go and buy Geo Finance stock. Probably making some real estate investments kind of makes sense, because you get like rental income, which is very certain, so to say, right? Please research about tenancy laws and all that stuff. Very important. But long story short, real estate can give you certainty of cash flows. Final point that I'll tell you is that, see, in the past, getting assured returns on FD was a great thing. Why? Because the risk-free rates kind of made sense in alignment with inflation. For example, if the FD rates were 6 or 7, inflation was 5 and 6 ke aaspaas, so okay, net it's fine, not a big deal. But what has happened now is that debt has been absolutely crushed by inflation. So if the inflation in the economy is de facto 8 or 9%, FD post-tax is like 4.5%, 5%. It does not make any sense. So you have to go to another asset class which can somewhat give you certainty of cash flow and at the same time has certain opportunity for growth. So real estate becomes one of those points, right? So this is like an important bit that I will share with you. Okay, so I hope that these points were useful. There are multiple other points that you need to be aware of, but I thought that these are like some critical things that you should know as a real estate investor. If you enjoyed the video, do subscribe to the channel, and I'll see you the next time.